Hi, this is Ron Janish, and this video is about entry signals with Andrews OR indicator. And as a little bonus in here, we're going to have a little bit of a focus on finding the faster moves. And another thing we're going to focus on is overcoming problems in forex. And there are some difficulties in trading forex, as you'll see. And we're going to show you how what you learn in here will actually help you overcome that. Okay, so without further ado, let's take a look at what are the three primary types of entry signals that people use. Well, first thing they look for is some type of place where prices are likely to reverse, and so we'll call that a reversal point, and they'll quite often put an order in at or near that reversal point. And another one is breakaway, and we'll show you some of that. And another one is pullback. Okay, and so what we're going to do is we're going to show you how this works. Let's take a look. Uh, here are some typical recent OR signals, and some of these you may recognize from my newsletter. May 5th I sent out a newsletter, and if you don't get the newsletter, just go to andrewscourse.com and click on new and sign up for the Andrews Course free Yahoo group, or if you're a course member, you'll automatically get it, and you'll get the newsletter. It comes out like once, twice a month. Anyway, these are here. These are ones that were featured, and here, and this is just the OR point. And remember that, as you know, the OR is nothing more than a reaction line, and this is some place where a reversal is expected. So it's also an expected reversal line, effectively. Okay, and here's another one, Manhattan Associates. This one had one, and Newmont Mining. I touted that one in the newsletter as someplace where you can get a 4% dividend. I know I bought this stock, and it gives me a 4% dividend, and you know, and if there's inflation, I guess there's a good shot that Newmont Mining, which is the premier gold company, will go up. AGU is one. That's these are just stocks that and this is one that I wound up buying today, and I'll show you why I got in today. And then ILF. Okay, and let's. This is a 60-minute chart, so this is kind of a neat example. Uh, One of the things that you'll find is prices will come to an OR point, and in some cases they'll keep on going, and in cases like this one here, they did a nice little reversal. And so one of the things you can do is you can, let's see if how this works out. There we go. And you see that prices went way down past the MLH and all that other good stuff, and that's not really relevant. What's relevant is that after they do that, they will go, and if they go to the OR point and reverse and then break up, this is effectively your breakaway point. Okay, but what I do is I'll wait a little bit before that, a little bit after that rather, and so I'll wait for a pullback. Okay, so this morning prices did a nice little pullback, and so I wound up buying down here. And so, let's go over it once again. The three primary methods of an entry after an OR signal is you can enter at or near the line where the OR comes in. You can enter after a breakaway, which would be like up here somewhere after prices break above an MLH line. And then you can wait, like I did this morning. I wound up buying some down here. So you can see here the price 9:30 in the morning, right? And so that was in New York. And so that's how people use the OR. Those are the examples of the three methods. We'll take a little more time with that. Okay. Uh, Yeah, this is in the forex. Now, one of there's some real problems in the forex, in that some people will miss a signal, and they'll miss a signal because they like to do this thing called sleep. And so, but that's not a problem with the ore. Let me show you why. Uh, with the ore, you'll so prices come up here, and let's say this was overnight. Yeah, this was overnight when they went up here and hit the to go into the ore reversal point. So this was 4 o'clock in the morning, New York, which for me is like, oh my God, 1 in the morning. So see, so what happens is you draw your ML, and you can simply let prices reverse and do a breakaway. And here's your breakaway past the MLH after they hit the ore. And then if you're like me, who likes to wait for the pullback, here you can, or just get in right at the ore point. I mean, to me, I prefer getting in near the ore point. In some cases, I'll get in on the pullback. See, this was really nice. This was what was this? 12, 2300. That's 8 o'clock in the evening my time. So dropping by here and looking at it, this is a not a bad place to look at the market and get in, as we can see with perfect 2020 hindsight. And so there's another thing you can do, and that is when you have this much data here and you want to find a better pullback point to enter on, look for an ore. Because what you can do is you can pop this down from 60 minutes to 5 or 15, and draw your ore lines with that. And as prices come up here to the ore reaction point, it's probably a decent place to get in. So using the pullback technique, so you can kind of combine it with different time frames, and that's kind of neat. Okay, let's see some other examples. Here's two other points where that I selected specifically because one of the things that people like to have is they like to have kind of notice that there's going to be a fairly powerful move, not just a reversal. Okay, and here you can see it was a nice powerful move also. Well, one of the things that happens is that when you get an ore line, sometimes it'll kind of look like this. Okay, and so what happens is they prices go down to the ore line, and they reverse, and and so here they reversed at the ore point. Now, okay, you can, let's see, you can wait for the breakout like some people do, and that's fine. And just know that when you have an ore point that doesn't make lower lows than the last 5 or 6 bars or higher highs, as it usually is, then um, or than the previous extreme, then look for this move to be a nice strong one. Okay, rather quickly. So if you have this situation, waiting for a pullback kind of doesn't work real well. Okay, as we'll see in the next example. Okay. Okay, so let's say, for example, your ore line was that, for example. Okay. In this case here, you could have probably done the uh, okay. So here's your ML, and here you have your breakout. Right, it breaks past the H. Okay, so here you have your entry on your reversal point, and here you have your breakaway of the H, and then here you have prices pulling back again. Okay, and so you can get the pullback, and then boom, away she goes really fast. So, but if you notice, the pullback really wasn't much of a pullback price wise. Okay, and that's not uncommon when your ore point doesn't make isn't the highest high in the area or lowest low in the area. Okay, like in this one here, uh, the ore came in up on this one here, so this was your highest high in the area, and that worked out. But if you don't have that, that's going to happen. And but that can work out nicely for you in currencies, because remember that in currencies you have the market open 24 hours a day. And give you an idea, this here happened at 1900 hours. That's 7 o'clock New York, and that would be uh, 3 hours earlier my time. So around supper time or early late afternoon, I have a nice entry area. And on this one here, this one's at 2100 New York, and so that's 6 o'clock, 6 o'clock in the evening my time. And and even if I wasn't around, let's say I was out having dinner someplace and I didn't come back until way late and didn't see it till much later, then I still have the opportunity to enter over here. Okay, so that's how to deal with that. One of the things you always want to do, and that is go over the other videos that you have regarding the ORE and finding the reversal points in the ORE. I've made some special videos for that. And also make sure that you review the March 1974 Andrews newsletters. There's like 3 or 4 of them, and they're all the ones I have are in the binder. And it's not just the newsletter, but there's special documentation that came with it, that where Andrews shows you using the New York Stock Exchange chart. I remember it was something with New York on it or something like that. It was a special additional document that's in the course material. Okay, and so make sure you look for that and just kind of review over the ore, and good trading. Later.